It's time for the Your Personal Bank Show with Ferenc Toth, president and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to Your Personal Bank Show. We have a special edition today. We're continuing our People of Excellence tour. And today I have a very special guest, Jack Riback. Jack, welcome to the show.
Thank you very much. Glad to be here.
So, Jack, can you tell us a little bit about your background?
I got into this business in a very strange way. I didn't grow up in the insurance business. What I did, or investment business, I was very creative. Worked for Disney for a while, several years ago. When I left Disney, I did something that kind of changed my life and kind of brought me into this in an indirect way. I worked for a pediatric cancer group, helped a bunch of kids raise money, literally hundreds and hundreds of thousands of dollars a year by working with these kids, getting them to draw pictures, turning them into products, getting them into about 700 stores in California. It changed my life. I love working with these kids. And a friend of mine said...
That sounds really awesome, by the way.
It really was. And a friend of mine said, you really like helping people. And I never thought of myself, I think I'm a nice guy, but I never thought I was, a saint or anything. And that really did change me a great deal. And my friend said, why don't you help people in the financial world? And I thought, financial world, I don't even balance my checkbook. This is going to be difficult. and the truth is, I said I'll keep myself open to it, but I really didn't give a lot more thought to it until my son, who worked as a...
I was going to say, Jack, I find kind of interesting working with clients over the many years. It's those, I always call those helping professions. The people, those professions where they go out there, they're creative and they help people. It's sort of a left brain, right brain kind of thing. They're usually not the logical type, so they're not strong in the numbers and finances. And, they're great at, like you said, helping people. And they're not strong in that other side of things,
well,
the logical side.
That's what I like about working with you, Ferenc, is that we have a team. So if I don't cross all my T's, someone else is better at it than I am.
Sure.
But the one thing we have in common, I feel very good about helping people. I remember coming home one day and my son said, how was your day? I said, I had a great day. He says, did you make a lot of money? I said, I made no money, but I had a great day. And I really did. By the way, I just wanted to say, my son worked as an intern for Ferenc. This is for you. This was a long time ago. And
sure.
He came to me and he said, you got to talk to Ferenc. It's this incredible banking concept. You bank on yourself. And I listened to it and I thought, that can't be right. It's got to be a scam. Doesn't make sense. And I trust my son, a very smart kid. And he said, will you promise to just meet Ferenc? And I did. And I was very impressed with Ferenc, but I really wanted to learn about this before I would go to anyone and say, hey, I want you to do this, or I invest in this.
Well, Jack, you're kind of glossing it over, because I remember when we first met and we had dinner, you said, well, you sat down with me and you're like, I don't really want to be here. I'm only here because my son, Matt, made me promise I'd meet with you, and this must be either illegal or unethical in some way.
Well, that's
how we started.
That's how we started. And you know what? It's funny because so many people that I've talked to since, and I've done very well because I really am enthused about this, the whole concept. I am passionate about it. I had to know that it was really something that I believe in, and I have to tell you, I do. And I'm a little older than a lot of these people out there. I'm probably the oldest one in the office, but I've made a lot of money in my time. I mentioned Disney. It was a nice paycheck I got there. Had my own business and made a ton of money. I never had anyone giving me this kind of advice. And I don't want to say that it hurt me because I had, I'm living a good life. But the fact is, I wish I knew about this earlier. But it's very important for me to say, when I got into this just a few years ago, 4 or 5 years ago now, it's one of the best things I've ever done because it's providing me with all the things Ferenc talks about, but the accessibility to cash, the compound interest. I now have money 5 years later that I wouldn't have had 5 years ago.
Right.
And so I'm grateful for it, and I'm using it quite a bit. Paying off one of my son's student loans, for example, is a 6% loan. I don't want to go into too many details, but I take it out of the policy, out of my banking concept, and I'm earning 5% on the money that I'm paying off a 6% loan. So even though I'm paying off the 6% loan, I'm earning 5%. It's really only costing me 1%.
Right.
I love it. So we're going to do it for cars, and it's a wonderful concept.
Sure.
But I just want to say, and you said talk a little bit, one of the first people that I went to when I said I'm going to see about this business was a gentleman that was older.
Well, before we go into that,
Jack, go ahead.
So you kind of mentioned, we first met, and then, like I said, that meeting turned around fairly quickly. You to Jack's credit, he saw the light and recognized, wait a minute, there's something here, and you decided, you were working with another company at the time. You decided to join our agency. Why?
I found that, number one, I couldn't just go out and sell something that everybody else was selling. Not that there's anything wrong with that, and everybody needs insurance and all this and that. It just wasn't for me. I wanted something that I felt passionate about, and the more I learned about this, and I'm telling you, I studied this thing extensively. Ference had mentioned that we use a company, the vehicle that we use is a company out of Nebraska.
Right.
And I went back there and I studied it and I trained and read books about it, and I really changed my life. I really did. And I'm kind of, and not to pat myself on the back, but I'm proud of myself. I changed directions completely getting into this business, and I love it.
By the way, the book, I think you probably read the first one I recommend, which was Financial Independence for the 21st Century.
Yes.
By Dwayne Burnell.
Yes.
I recommend, if anyone who's listening wants to learn more about the personal bank concept, there's about, a dozen or so books, I believe, total that I've seen on the whole concept. My personal favorite is that one. Again, you can go on Amazon or anywhere else and get it. It's Financial Independence for the 21st Century by Dwayne Burnell.
Yeah, and you can even buy it used from Amazon for very few dollars.
Right.
All of that combined to make me more and more enthused. And as I saw people really using this thing and helping people, I started to say I like to help people. One of the first clients was a man that had a stroke. He was in terrible shape. He had to get his money. He had no liquidity. He had to sell his or cash in his annuities. I hated to do it for him because he lost like almost 30%, by taking his money, but he needed it. It was at a critical time. And
that was because of the values and things and penalties?
He like you talk about the accessibility of money and liquidity of money with the banking concept. Right. With an annuity, he couldn't touch his money without paying a penalty.
Okay.
And so
the only reason I'm asking is 30% is extraordinarily high.
It was high. Somebody had talked him, not us, but somebody had talked him into putting your money in this. So it wasn't he didn't have much, there was no aging on it. So he's only had it for like a year, and they take a big chunk if you take your money out right away.
Worst case scenario, in other words.
Worst case scenario. And then his other asset was his house, which many of us feel is our retirement. Well, he had to sell his house in a matter of days. Not the ideal way to sell anything.
No.
So this poor guy, it made me convinced that I'm in the right business because I want to help people, and a lot of people are not getting the kind of advice they really should have. It's not about selling a product. It's about finding out who these people are, become friends with them, find out what it is they need, and then find the right way to help them. Not to just have them fit into the product, but let's get the right product to help their particular needs.
I love that, Jack. So I'm going to ask you some more questions in the next segment, of course. And like I said, people of excellence, I asked Jack to join us because of his background. Maybe we'll talk a little bit more about the Disney experience. I know he had quite some interesting stories there. But Jack is truly a person of excellence, as I like to call him.
Thank you, Ference.
And if you want to meet Jack and myself, he'll be at the workshops in Chicago on January 18th and Phoenix January 25th. Go to yourpersonalbankworkshop.com to register. It's free. 10 to 1 on both occasions. We'll be going to depth on how your personal bank works, how it can affect your situation, how it would fit in terms of maximizing and enhancing a financial future for you, your family, and your business, and create a legacy. Stay tuned, because the next segment we're going to talk to Jack some more and ask him a few more questions about your personal bank.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. We're on a special edition of Your Personal Bank Show. We call it the People of Excellence. And I'm interviewing today, joined us today in studio, Jack Riback. Jack, welcome to the show.
Thank you, Ference.
So you were in the first segment talking about you worked with Disney. I know you glossed over that, but you've shared a few interesting stories. You mind sharing one with us?
Not at all. I may need a therapist when we're done, but it was a tremendous experience, and it was exciting, of course. I tried to be cool about it, but walking into the studio where movies are made was a very exciting time of my life. Well,
what did you do for Disney?
Well, we actually created a department. They brought me in. We negotiated for months because I wasn't sure. As much as I was impressed with Disney, as most of the world is, I wasn't sure that I was going to fit into a world that I really didn't know the movie business. And so they basically said, "Look, Jack, you're creative. Let's create a business for you." And they literally opened a door to a gigantic space and said, let's build a department. We created the name Strategic Alliance, which we made up, and now other movie companies have that division, just so you know. And they basically just wanted me to find creative ways to market films. So one of the first things I did, getting on the private plane and flying to Chicago, getting my signature on the contract with McDonald's, so that every time McDonald's would hold up a Happy Meal, come and get a Little Mermaid Happy Meal and show 10 seconds of the film. That's about $30 million Disney did not have to spend that month. So that's the kind of thing that I did, just finding clever ways to promote Disney and the Disney product.
What were some of the movies that you promoted?
Well, Little Mermaid, which gives you an idea of how long it's been. We did some re-releases like Bambi. Little Mermaid was one of the biggest ones. We also did Who Framed Roger Rabbit. Mm-hmm. We did that with Spielberg's company. Those were some of the main ones. Disney, Disney is magic, and I have to say it was very exciting, but
and I understand you even got to meet Michael Eisner and all that, too.
Oh, yeah. And by the way, it's been said that Michael Eisner, when he retired, has a banking concept. And he actually put it on his son, I believe, and is written in his will that when his son passes, he has to pass on the banking concept to his son.
Interesting.
And it's a way of building, and I don't know if you've talked about legacy building, but that's kind of what I'm doing personally. I have 4 of these bank policies right now in the works, and I have them on my son's name so that hopefully when I pass, if whatever money's in there or all the money that's in there will pass on to them, and they could pass that on to their children and build a future for them. And at compound interest, as I know you've talked about, it's like not get rich quick,
right.
But something I tell everybody is, I don't know anything better. I don't know anything that's safer. I don't know anything that's going to guarantee you the kind of interest that you make. So I love it. I feel great about it.
That certainly comes across, Jack.
Good.
So if anyone wants more information on this, we're going to be doing a couple of workshops. I'll be speaking. Jack will be with us there too. In Chicago, January 18th, and in Phoenix, January 25th. Your Personal Bank workshop.com. Register there for free. Again, yourpersonalbankworkshop.com. Jack, if you were talking to somebody now who's just looking at this idea, I've been encouraging the beginning of the year here, learn something new. Your Personal Bank for a lot of people is new, fresh, and different. What would you say or recommend to that person who's just taking a look at this idea?
I would say to them, and again, so I hope it doesn't sound over-enthusiastic or like I'm a salesman jamming it down their throats, but I'm very excited about it because, number one, I've seen too many people get hurt with their investments. I dealt with a man this morning, and we looked at his money, and he says, I thought I'm making 7% on my money. And we looked at his money for 12 years from the time he started it till now. He's not making 2%. And so what I would say to people is if you want something, you know what, let me put it in a real layman way, if I may. I look at myself as I look at the client. And what I want is to put my head on the pillow at night and feel that I'm being smart about my money. Mm-hmm. And I really feel that most people don't feel that. They feel a lot of nervousness about it. Am I doing the right thing? Why do my statements not show that I'm making money, even though I was promised money? And so
I think that's some really good advice there, Jack.
I just want people to feel good about what they're doing. And again, it's not for everybody, because sure, if somebody wants to go and put their money into oil wells,
or whatever,
they're gamblers, let them do it.
Right.
But I just believe in this. And I one of the other things I want to say very importantly, it's not only people with a lot of money. I deal with young kids. My young son just graduated college. He doesn't have a lot of money, but he's putting away $400 or $500 a month.
Good for him.
And he says he gets it. Most young people don't. Right. But he says, God, when I'm 50, I'm going to have like $500,000. Or I said, you understand it, and it's great. And a lot of people will say, well, why do you do that? You're not making much money as a salesman. Sure. But you know what? It's, as I said earlier, it's the right thing for him and people like that. It's helping people.
And you mentioned earlier, I get this question a lot. I like what you're talking about with the younger folks. That's awesome. I share the same kind of things. But you mentioned earlier, you're not on the younger side yourself anymore. And what would you? And I get this question all the time. Okay, this sounds like a great idea. I wish I knew about it sooner. But I'm an older person, and qualifying for the life insurance, I don't know if I can. What would you say to that person?
I would tell them it's never too late, and I'm a perfect example. As I said earlier, if I didn't start this program myself, and I'm not making a huge amount of money anymore, but if I didn't start this 4 or 5 years ago, I would have zero in the bank today. Mm-hmm. And now, because of this, I'm not only earning that compound interest, but I'm using my bank to even earn more, because I'm not putting it on a credit card. I'm not putting it into somebody else's loan. I'm borrowing it from myself and paying it back to myself. I love it. So I don't think it's ever too late. Now, it may be too late for some people because it is based on insurance, so you have to pass the physical. Mm-hmm. But as I did, only because my kids are younger and they're in a better physical shape than I am, I put it on them, but I still control it. I own it. It's my money. If I need it, I've got it.
So if somebody was older or health issues, whatever, they were concerned about that, they could still take advantage of the personal
concept. Absolutely. And whatever their needs are. I mean, I dealt with the two brothers this morning that I talked to. It was totally different situations. One of them has a great deal of money and isn't looking for money. The other one is looking to rely on some money as he retires to get something every year. So I work with them to find two different programs that will satisfy each of them. And that's, I think, what we do is really strategize to help the client.
And I liked what you said before, Jack. I mean, it's not for everybody, and we don't recommend the personal bank concept to everybody we meet. We recommend other options. A lot of people ask, do you do anything else? Yes, we do other products, other solutions, but we get excited about the personal bank concept because we find it benefits so many people in so many ways.
I love it. I think it's a concept that, again, if somebody could show me something better, I'll listen. But I don't know anything. And by the way, you mentioned the book by Burrell.
The book Jack's referring to is a Financial Independence for the 21st Century by Dwayne Burnell.
You read the first chapter and or the second chapter, you'll be convinced that there is nothing better than this concept. And it made a believer of me, and I've seen it work. I see it work every day. I get calls every day from clients who we help. They say, oh, I love the banking concept because of the compound interest. I'm not interested in using it as a bank. And then a year later, 6 months later, I'll get a call. Well, wait, you said something about able to use it like a bank. I was about to spend $9,000 for a new kitchen. And I said to them, how are you going to pay for that? They said, well, we're going to put it on a credit card. That's like 18% at least. And I said, no, take it from your bank. And they did.
And not pay the 18%.
Not pay the 18%. So you're not only making the compound interest, think of the money you're saving by not using the credit card. And that's just one small way that this could really work.
So if you want more information, please contact us at Toll free, 866-515-6280 or yourpersonalbank.com. And don't forget to register for our workshops coming up on Chicago, January 18th, Phoenix, January 25th, and register yourpersonalbankworkshop.com. Again, yourpersonalbankworkshop.com. Jack, thank you for joining us today. It was awesome.
My pleasure.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to Your Personal Bank Show, and I just want to thank Jack Riback for joining us in the previous two segments. It was pretty awesome. He's worked with Disney. He's got quite a wide variety background. Like he said, loves to help people. That's Jack's heart. If you want to meet Jack, contact us, register for the yourpersonalbankworkshop.com on January 18th. He and I will be in Chicago, and on January 25th, we'll be in Phoenix. Again, register yourpersonalbankworkshop.com, and 10 to 1 in both cases, and we'll go into depth on how the Your Personal Bank concept works. And as Jack was leaving the studio, he said, yeah, if they come, they want to hear some behind-the-scenes stories about Disney, he'll be happy to share more details on that. Jack's a great guy. I love working with him. It's fun to work with people and have folks like that join the team and just see the vision of, like you said, making a difference. And that's really our goal is to make a tremendous difference in people's lives at least from a financial standpoint at the very least, sometimes more than that. But the reality is the number one cause of stress, for most people, the number one cause of divorce, we've all heard it's financial problems, right? So we want to try to solve those as best possible. And the biggest challenge we run into most often that I find is, one, most people are overly, they've got too much of their money at risk, more than they're comfortable with. We'll put it that way. When you really sit down and actually really talk to them. And the other thing, and the reason why there's many reasons why, but one of the most common one is they don't realize there's any other options, and it's kind of like what everybody else does, and they're just following the crowd, but they're not personally comfortable with it. But they were talked into it, through peer pressure and various things, right? And then the other one is not enough access to capital, ready access to cash if you need it or want it you need it for an emergency or want it for an opportunity. And people are resistant and reluctant because, in many cases, again, so much of their money is tied up into things like qualified accounts, IRAs, 401ks that, have tax penalties, taxes, there's penalties in many cases, or they have annuities with penalties. I mean, you name it. Or at the very least, if there's no penalties or taxes involved, they understand if they take the money out, they lose the future growth. So you lose the future opportunity cost. Well, with the personal bank concept, you can take advantage of the future growth and not lose. You can access the funds without losing the future opportunity potential there. So, and you don't have the penalties and you don't have the tax consequences. So you have ready access to the capital. Like in Jack's example, I thought it was great. The folks that were going to remodel a kitchen. It's a small example, but, add a zero, take away a zero. It doesn't really matter. The principle is the same. Rather than paying 18% interest on a credit card to pay for a remodeled kitchen, which means that kitchen would have ended up costing quite a bit more, depending on how long it would take to pay that off. I mean, if it took some time, if they paid minimum payments, frankly, depending on interest rate, and he mentioned 18%, that could easily cost them twice, 3 times the total cost if they paid out over time. Instead of paying all that extra interest, again, put my banker hat on for a minute. I'm the chairman of the board of a bank in formation. I understand how banks operate and lenders operate. And I assure you, don't feel bad for the lenders. They're doing just fine. Okay? I'm trying to teach you how not to be working for the lenders. Okay? Now, if you don't choose not to listen and you want to pay the 18%, like this example in these clients that Jack was referring to, go for it. I mean, the lender is going to make out just fine. But if you don't want to do that, okay, as he explained, they could access the funds from their personal bank. First thing that happens is they're not paying 18% interest anymore, right? So there's a big win right there. Plus, if they're accessing the funds from the contract, okay, it's still earning, they're still getting credited interest on the money, on the borrowed funds. And depending on which product you go with, there's a couple of options these days with fixed and variable loans, okay? And this, maybe I dig into the weeds a little bit here, but some of the new life insurance products, the high cash value life products, have some tremendous new options in terms of a variable loan option. And a variable loan option, by the way, right now, okay, it's tied to the Moody's Corporate Bond Yield Average, okay? And as we currently speak, that rate is about 3.4%. Well, if you're getting credited 5, which is the current crediting rate, and you're getting charged 3.4, and yes, there's some cost of insurance and fees involved in there, but the bottom line is you're going to most likely have a positive arbitrage situation. What does that mean? Positive arbitrage means you are using funds. In our example, we use the example of the kitchen. They're taking the funds out. They're getting credited 5. The cost of the loan is 3.4. There's a 1.6 positive arbitrage. Even if there's some costs and fees involved there, let's say it's 1%, to use an example. A positive arbitrage of 1%. What that means is they're earning 1% on money that they spent on a kitchen. As Jack was saying earlier, if we knew about something else better, we'd be talking about it. Where else can you spend funds on a kitchen, for example? And by the way, apply this to anything, a car, a house, any other expense, an investment, you name it, whatever you would use those dollars for, doesn't really matter. But yet you're making an extra 1% on it, on those dollars that are spent. And by the way, your interest, your dividends, what you earn is not impacted by the loan. So there's no extra loan fees involved or anything else like that. It's what's called non-direct recognition is the technical term for those of you, the detail people. Non-direct recognition means the company's going to credit the interest, dividends, whatever the crediting is, irregardless of whether you borrowed those funds and used them to remodel a kitchen or not, okay? Or took that money and invested it in something, or took the money and paid off a bill, or took the money and bought a car. This is real life stuff, is what I'm trying to say, okay? I shared a couple of thoughts too, in previous shows, where I shared with the personal bank concept. If you're looking at this, and again, I've encouraged this is beginning early part of the year. I've encouraged your goal setting sessions. If you want to more information on that, go to yourpersonalbank.com. Go to the December 31st show, and we spend an entire hour on goal setting and how to make New Year's resolutions and goals stick. Okay, go back to that and check it out. My point is this: if you're going to make a change in your life, the other thing I shared with it is, and make these things stick, make a difference that makes a difference that stays. I challenge and encourage everybody to learn something new for 2020. If you haven't looked at this and really took a serious look at this, I encourage you to do so. Because again, it can truly change the financial future of you, your family, your business, and your legacy. Okay? Where else can you earn interest on borrowed funds? Okay? So 2 of the things that I found is a quick little secret. Okay? There's 2 quick little secrets to know if the product or the tool you're looking at, because here's the exciting part I'm finding. When I was sharing this idea, first started sharing this idea, I don't know, probably 6-7 years ago now, and we've started using this with our family and our business, and it's made a tremendous difference in our lives, like Jack was referring to in the earlier segment, where we had the roller coaster of income with our business, like a lot of businesses have. Feast or famine, if you will, that cycle, typical business cycle, it's alleviated those feast and famine cycles because we have access to funds during those times when things aren't so good or it's a slow season or whatever. My point is, I'm enthused about this, I'm passionate about this, and I'm sharing this on the radio and with people in workshops, like I said, January 18th in Chicago, January 25th in Phoenix. Go to yourpersonalbankworkshop.com to register. It's free. My point is the reason why we're sharing this is because I'm passionate about the mistakes that were made financial mistakes that were made, and the difference it's made in our lives. In the last segment, I'm going to share, if you're going to look at this concept, what are 2 key things you want to look at that are very simple to understand immediately whether the product you're looking at is a good fit for the personal bank concept and maximizing your cash or not. See you in the next segment.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. Round and third. We've been talking about a lot of great stuff today. First of all, we had a great guest today, Jack Riback, our People of Excellence tour. Jack's got quite the interesting background working with Disney. The pediatric children's group he's worked with. He's just helped a lot of people in his life over a lot of years. And now he's found a new calling. He's helping people with change their financial future. So it's pretty awesome what he's doing. Check out if you didn't get a chance to hear the first 2 segments, go to yourpersonalbank.com. You can listen to it anytime and listen to Jack's story about the personal bank concept and how it's affected him and his family. And certainly that could do the same for you. In the last segment, I was talking about a few things about the personal bank, the concept of how it changes people's lives, how it can work for you. We talked about an example with a client who was getting ready to remodel a kitchen and was preparing to put it on a credit card and pay 18% interest. And Jack said to her, "Hey, why would you do that when you can just access the funds from the personal bank and not pay the 18%?" And if you understand credit card and compound, by the way, if you understand compound interest, we talk about how compound interest, the rule of 72, money doubles every 10 years at 7.2% interest. That's the rule of 72. So if you had 100,000, it'll go to 200,000 in 10 years if you earn 7.2% interest. By the way, the power of compound interest is the next decade, for the year 10 to 20, it would double again. So it goes from 1 to 2, 2 to 4. So 100 would go to 200, 200 would go to 400. By the way, the next decade, what happens? 4 goes to 8. Okay? That's where the power of compound interest, Jack mentioned, doesn't happen overnight. It's not a get-rich-quick scheme. But over time, get out of the way. And if you're using it, even if you're older, that's one of the questions you get, and use it like Jack mentioned with his family, incorporating some of the other younger generations, it can create a legacy that can go on for multiple generations, which is pretty exciting. That's one of the questions we get all the time. Well, this is awesome. I wish I knew about this sooner. Well, we all do. I can say the same thing. But if your age is, or your health is where you don't feel like you could qualify for the life insurance portion of this tool, that's okay. You can utilize some of the other family members or healthier or younger family members or business partners or associates that you work with, and you could insure them. You're the owner, which is like Jack was talking about, and you control the money. You're the owner. It's your money, okay? But you can pass it on tax-free. Income tax-free if it's done properly, okay? So here's the thing. What is the secret? We've encouraged and challenged people to learn something new this year. And hopefully your personal bank is one of those things that you are considering learning about. You haven't utilized this as a tool. Maybe you looked at it a while back. Maybe the numbers didn't seem to make sense, whatever. Most people I find have not really even looked at it. But how do you know if you're going to look at this? What is 2 secrets, I'm going to tell you right off the bat, to know that the product or the tool that you're using, or looking at using, is most advantageous. It's going to maximize the cash values. Because remember, what are we doing with this tool? We're using a high cash value insurance tool, but we're using it the opposite. We're using insurance the opposite to how most people view it and use it. Most people use insurance, life insurance in particular, to maximize death benefit protection. You pay a minimum premium to get the biggest death benefit bang for your buck. And the purpose is, if something happens to you, your heirs get a check, right? It's that simple. That's death benefit protection. And that is not what we're talking about here. I always tell people, think of a teeter-totter. Put it opposite. Flip it on a dime. Completely reverse everything you've thought about or know or understood about life insurance. This is where some people lose comprehension, if you will, because they're so stuck, if you will, or in that paradigm of what life insurance is about, and they can't get outside of the box, if you know what I'm trying to say. But if you're willing to realize, wait a minute, there's other ways to use this tool. And again, banks, businesses, wealthy families have been using this tool commonly for centuries. Okay? I'm on the board of a bank, chairman of the board of a bank in formation. We're getting ready to open hopefully in the next year. And those discussions have already been made. We've had bank consultants, high-powered bank consultants, come in and teach us and talk to us about, and even the consultant said this is very commonly used as with banks with their Tier 1 capital, their reserves, what they're investing in, and it's approved and authorized and recommended by FDIC. Gosh, if it's good enough for banks, why not you and I? That's my point. Now, the secret. What is the secret to know if your tool you're looking at, considering, is the best that can be done? Well, right off the bat, I'm going to tell you, whatever you contribute, the amounts of funds you contribute, there should be at least half or more available day one. That's a real simple one. By the way, most clients we deal with, in most cases, it's more like 60 to 80% range. But it should be at least half, and that can vary based on age and health and various things like that. But if it's less than that, I'm going to tell you right off the bat, the tool you're looking at is not a good fit for the personal bank concept. There's not enough cash allocated, allocated to the cash side to allow it to grow and maximize. There's a lot of reasons behind why that may be the case. I'm not going to get into that right now. That's for another show, which I've dealt with before. Bottom line is, whatever you contribute initially, better be half of it available or more, or the tool is not you don't have the right tool, or it's not structured correctly. Okay? That's number one. 2, what's the second secret to know you've got the best tool available? You're utilizing the best tool available for the personal bank concept to maximize your cash. Well, you want to have a option of the variable or fixed loan options, and you want to have a maximum contractual rate of interest that can be charged. Now, products we have currently on the fixed side has a maximum contractual guaranteed rate of 5%. In other words, they'll never charge you more than 5% interest on any of the funds you borrow. That's important. That's powerful. Okay? Because I get people who say all the time. And by the way, the company currently the fixed rate they're paying is 5%. So basically the cost of the loan is going to be minimal. My point is this. I get people all the time saying, well, I got a better product because it pays 6 or whatever versus 5. Well, it sounds better. You want to earn 6 or you want to earn 5? Yeah, I would agree with you. 6 is better than 5. But when you run the numbers and look at how much cash is available actually to the client, the 6% products that we compare, there's less cash. Every situation we've compared, first year, 5 years, 10 years, 20 years down the road, there's less cash. Why would there be less cash available on something that's earning 6, getting credited 6, versus something that's getting credited 5? Well, folks, the answer is really quite simple. And this answer is it all has to do with fees. In other words, the fees, cost of insurance, whatever, are higher on the 6% product than the 5. In all the examples that we've looked at previously. I'm not saying there's one out there. And if there is, send it to us, yourpersonalbank.com. Love to look at it. And we'll give you an apples-to-apples comparison. My point is this. It's not about what you're earning. It's about what you have available, what you keep, how much cash is there. Whichever one has more cash available to you and for future growth is the one that's going to have the most cash, right? So that's what you want to look at. Don't fall for that trap is what I'm trying to say. So again, the 2 big secrets, 50% of your money available day one or more. And 2, which one has the most cash available each year as you go forward? We can show you how that works. We'll explain further at our workshops on January 18th in Chicago, January 25th in Phoenix. Register for free at yourpersonalbankworkshop.com. Check it out. We're going to go from 10 to 1. We're going to depth, answer any questions. You'll get a chance to meet Jack and I. He'll tell you stories about behind-the-scenes stories about Disney if you'd like. But again, yourpersonalbankworkshop.com. Register. We'd love to see you in Chicago on the 18th or in Phoenix on the 25th.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.